if you're trying to get a personal loan from SoFi, I'm going to expose you to their loophole, okay, and how it's done so you can get higher limits. And sometimes you can get around this with no documentation. So I'm going to break that down, understanding that with SoFi, they have their 4 criteria. Most people may be aware of it. Some people are not. All right. So their 4 criteria is income. All right. That's number 1. The debt to income ratio is number 2. Then the age of your credit file. Now, this is very key, and I'm going to show you a hack on how to get around that as well. And then they're looking at the amount you borrow. That's also a hack. So let me address the amount you borrow. If you're trying to go in with no documentation, then I would tell you, you want to keep the requested amount under $25,000. With most lenders, when you just trying to get in with them and build a relationship and stuff like that, you definitely, and you don't have all the documentation, then you definitely want to keep it under $25,000. All right. Now, here's another thing. With SoFi, they actually will give you a discounted rate of 0.25 for 3 things, okay? And this is actually will lower your interest rate, and this is also going to help you as well, all right? So one way is to set your loan up on auto pay, all right? This is to help you save money on your loan for when you get approved, all right? And I'm going to go back to the other things. But number 2 is that if they're going to be paying off your credit cards and stuff, if you're doing debt consolidation, they're going to be paying off your debts and stuff. They'll give you a discount rate for that as well. Now, number 3 is that when you set up a checking, a savings account, you do a direct deposit minimum of $1,000. Now, there's a hack to that as well. And so the hack to that, especially if you are a self-employed, okay, you're an independent contractor and stuff like that. What you can do, if you have a registered business, then all the income that's coming into that registered business, you can actually have a portion of that income paid into this checking account with SoFi. And this is actually going to help you save money on the interest rate of the loan, okay? So that's 3 ways you can actually save money on the interest rate of the loan. Now, going back to talking about those 4 criteria, all right? Now, here's another thing, your DTI. With a lot of banks, usually the DTI, they do 55%, okay? Now, with SoFi, sometimes they may be flexible depending on your income, which is another subject. They may go up to 60%, all right? Now, also understanding about the inquiries, all right? So with SoFi, sometimes the inquiries that are on your Experian file, they may disqualify you for that, all right? So say that you may have had 6 inquiries within the past 6 months, then this may disqualify you. So you have to really look out for the amount of inquiries you have on the credit file. All right. Now, you can easily just call Experian, since they mostly pull Experian, and you can dispute those inquiries. All right. Now, I would tell you, do not, if you get approved with SoFi, do not call Experian, okay, and dispute that inquiry. And I'm going to tell you why. If you dispute that inquiry, what ends up happening when they reach out to SoFi, SoFi will look at it as fraud, and they can possibly shut your account down, okay? If you're going to dispute that inquiry, you want to make sure that you had the account open for at least 9 months, okay, before you challenge that inquiry. Because, again, when the credit bureaus reach out and say, hey, this person is disputing this inquiry, do you want to check it out? If it comes back to SoFi, and again, you don't want to lose your account, all right? I'm just letting you know, giving you a heads up, because some people say, oh, just go right in and dispute it. You can lose your account for that, all right? Now, in terms of the income. When you go in for SoFi, if you're not making $45,000 or above, this is not the loan for you, okay? And I'm going to tell you why, all right? Because they're looking for a certain amount of disposable income, all right? And so usually if the income after taxes isn't $1,500 or more, then you're not going to qualify for that loan because your income is too low, all right? And some people are not aware of this as well, okay? Now, in terms of how do you get around that, is that if you know that you have a low income, however, you have other income coming into the household, people that contributing, and you're the primary for paying all the bills and stuff, then you may want to include that. If you have a spouse that's working and stuff, make sure that you include their income. If you're on government benefits and you're receiving rent from other people and stuff, make sure that you include that income. Now, I was telling you about the amount. This is so important because most people, they would go in and they see that SoFi offers up to $100,000. However, when you go over that $25,000 threshold and they pull that credit report and you don't have a car loan on the credit file, you do not have a mortgage on the credit file, this throws up a red flag, okay? Now they want to see pay stubs and bank statements. So to position you so you don't have to produce these documents, what you have to do is keep it under 25,000. Now here's another hack that people do in order to get approved for higher limits with SoFi as well. So what they would do, they would find loans or lenders, they would find lenders that offer loans that do not report on the personal credit file. Now, these here loans, usually they typically average about $5,000. And so you all hear me talk about the platforms and stuff like that. The reason is because if you're on government benefits, they're more flexible. As long as you have an active checking account with deposits, even if you're self-employed, they'll work with you. And the good part about it, because the platform, some of the platforms, since they're not direct lenders, their interest rate may be much cheaper. Okay. And so those platforms is like Viva Payday Loan, Big Buck Loan, Green Dollar Loan. Interest rates on those type of platforms goes up to $5,000 for the amount they loan, but the interest rate hovers between 5.99 up to 35.99. Now, if you need to go with a direct lender, that's not going to ask for a whole lot of paperwork and stuff, then this is where you're going to look at your tribal lenders. So with your tribal lenders, what ends up happening, they're not going to ask for a whole lot of paperwork. However, the interest rates is going to be crazy. All right. And so like with those tribal lenders that you're looking at places like Credit Fresh, Credit Cube, that go up to $5,000. Okay, you have big picture loans. They do about $3,500. All right, but the purpose of these loans, that's the main thing. The purpose of the loan is because they don't report on the credit file, and so your DTI will not go up. This is something why you get to leverage this, because you can take that money, and if you have like small open revolving accounts, pay those accounts off. Okay, so by you paying those accounts off, this is going to increase your credit score and reduce your debt to income ratio. Now, another thing to increase the credit score is if you request a credit limit increase. So when you pay that revolving account off, do not close it out. Just see if they will give you a credit limit increase. All right. And so this here, again, helps with the DTI, the debt to income ratio, to help you. All right. Now, something else in terms of, I was talking about the aging of the credit file. That's where you add the authorized users, the rental payments, and utilities. Okay. And so by you adding that authorized user, it has to be the right type of authorized user, and it has to be less than 10% utilization. okay? Because that right authorized user not only is going to give you more points on your credit file, however, it's going to push down your debt to income ratio and also aids the credit file, because with SoFi, they usually want you to have at least a 2 years or older. All right. And people with an 800 credit score, they have a great credit score, but they have a thin file. So if you have a thin file, less than 4 accounts, this can also count against you in order for you to get denied with SoFi as well. All right. So I know this is a long video. I hope this video helps you. If you have any questions, schedule a one-on-one consultation. Click the link below to talk about business credit, personal credit, removing negative items, and we'll be able to help you. Thank you.